George Bennett is the CEO of Rainbow Rare Earths. He's very kindly agreed to join us today to give us a bit of a briefing about rare earths, about the market itself, about the opportunities that are available in that market, and about how investors can benefit. So, George, thanks for joining us.
Thank you for having me. Pleasure to be on your podcast.
So let's start at the very beginning then. Tell us a bit about rare earths. There are sort of several rare earths. They have exotic names. What are they and what's interesting about them?
Well, for a start, rare earths aren't that rare. That's the first anomaly, is that,
Yeah.
but they're rare in economic quantities. So in terms of extraction. So as I've mentioned, rare earths aren't rare, but there are very few rare earth projects that can be successfully brought to the market. And what these elements are, that 17 elements on the periodic table. They've got exotic names like neodymium, praseodymium, dysprosium, terbium, cerium, lanthanum, gadolinium, samarium, europium, and so forth. I've done quite well out of those 17, I think. But these rare earth elements are, as I say, all found together when you mine them, and you mine them as a concentrate initially. And the analogy I can use for your audience is to understand a platinum mine. Now, platinum mine is not really a platinum mine. A platinum mine is a basket of PGMs, platinum group metals. So you get platinum, you get palladium, you get rhodium, you've got a bit of yttrium, and you've got normally a bit of gold and often some chromite in the platinum deposit. The reason why it's referred to as a platinum deposit is because platinum is your dominant metal in that basket of platinum group metals. So when you mine platinum, you mine all these elements together in one basket, and then you produce what they call a platinum concentrate, or PGM concentrate, I should say. And that PGM concentrate is then sent to a smelter, who then, through smelting technology, separates individual elements out into your rhodium, your palladium, your platinum, and so forth. When you mine a rare earth project, you get all 17 elements together in a concentrate. So that's your first stage of mining. And some projects stop at a mixed rare earth concentrate and they sell that. Some projects then go one step further, is that before you can separate your individual rare earth elements out, you need to crack your concentrate from a mineral form into a chemical form. And once it's cracked, you then end up with a mixed rare earth oxide or a mixed rare earth carbonate. And then you go through into final separation process to separate the individual rare earth elements. And the reason why you separate the individual rare earth elements out is because they've got different properties. So for many years, cerium was used in television screens, and it's still used today in night vision goggles for the military. So, but it's a very common element in your rare earth basket. Normally, about 50% of your basket is made up of cerium. Then you've got lanthanum. Lanthanum was very important in fluorescent lighting and other light applications, and so forth. So all these rare earths have different properties and they're used in different applications. But most of it very high tech. And what's happened over the last 20 odd years, there are four key rare earth elements that are very important for the modern technology as we know it today. And these are neodymium and praseodymium and dysprosium and terbium. And these are what we refer to as the permanent magnet rare earths, because they all go into permanent magnets. You need a lot of neodymium and praseodymium in your permanent magnet, and you need very small traces of dysprosium and terbium. And that's fortunate because dysprosium and terbium are produced in much lower quantities than dysprosium and terbium. So, but very important. And what's happened over the last, as I say, 20 odd years, they go into these things called permanent magnets. And permanent magnets go into all modern tech. So your iPhone vibrates with a permanent magnet. Your handheld consumer electronics have got permanent magnets. Your Bose earphones and your Bose speakers have permanent magnets which make them vibrate. To get your sound, all your electric vehicles and your plug-in hybrids today have between 3 and 5 kilograms of permanent magnets per vehicle. So as you know, with the explosion and EV take-up and plug-in hybrids over the last few years, there's massive demand now for the permanent magnets made out of rare earths. And then your wind turbines, with the rollout of wind turbines globally for green energy, a 3 megawatt wind turbine. So the big wind turbines you see in the sea or even on land, those bigger turbines at 3 megawatts of power that they produce in electricity, have 2 tons of permanent magnets per turbine. And of those 2 tons, about 700 kilograms are rare earths. So as you can see, as the whole world's focusing on rolling out more green energy, more EVs, more plug-in hybrids, the demand for permanent magnets has risen. So demand over the last 5 years has more than doubled and is forecast to double again just on those current applications. But what we've got recently, which I'm very excited about, I'm still excited about wind turbines and EVs and plug-in hybrids. But I realized late last year that there's two new frontiers of demand for permanent magnets. And that's called robotics, the humanoid robotics. It's got full humanoid movement, and what they call eVTOLs. That's electrical takeoff and landing vehicles. Now, these are basically air taxis that look like a Star Wars spaceship that you saw in Star Wars 20 years ago. Well, these are actually real today. They've been trialed in Dubai, and their 4 commercial licenses have been issued in America. So 2 to JFK, 1 to LAX, and 1 to O'Hare. So these are all the very busy international airports in the States. They are busy trialing these air taxis. And these air taxis take 25, 30 kilograms of permanent magnets per taxi. A robot takes between 5 and 15 kilograms per robot of these permanent magnets. So your eVTOLs or your air taxis, they say from LAX to San Diego, it'll take you in a taxi, a normal taxi, hour to an hour and a half of traffic. And the eVTOL is going to take you 8 minutes. The same price as an Uber Black. So you can see why there'll be an explosion in demand in this type of air travel. And as I say, they're already doing trials in Dubai, and they're starting them in the US. Then you look at your robotics. Apart from your robots that are used in industrial purposes today, humanoid robots are forecast between now and the end of 2040 to explode in demand. Elon Musk talks about 10 billion robots on the planet by 2040. That's in 15 years. Now, even if it's not 10 billion robots, humanoid robots, but only 2 billion, it's still 4 times more than the amount of EVs that are expected to be on the planet. So you can see this massive explosion in permanent magnet demand for robotics is very real. And in fact, there was a Tesla announcement about 3 weeks ago with the advent of China suspending the export of some permanent magnet rare earths. That the thing was, where's Tesla going to get its permanent magnets for its robots? So we're in a very, very interesting period for rare earth demand, permanent magnets, and the growth forecasts in these new frontiers, which I believe are very real, because you've got negative growth rates in China, you've got negative growth rates in South Korea, Italy, Japan, and so forth. So where's with that negative growth rate in these large populous countries, where they're going to get their labor from? And it's going to be from these humanoid robots. These robots will be tying your shoelaces, pouring drinks for you behind the bar, picking grapes in the vineyards. These things are very real. And the reason why they need permanent magnet motors is because they have to be very tiny. You can imagine the fingers of a humanoid robot, put a motor in those fingers, they have to be very small. But to be able to grab something, they have to be very strong. And permanent magnets allows them to be very strong motors and very powerful motors. And that's why it's so important in those new applications going forward. Do you have any questions at the moment?
Yes, I mean, I have tons of questions. I mean, I'd like to talk about demand quite a lot, but just to sort of go back to the beginning, you said that rare earths aren't that rare, but they are rarer in economic terms. But let's talk about the other aspect of the phrase rare earths. What about the earths bit? Are they actually earths or are they metals? Why are they called rare earths? What do they look like?
They basically look like grains of sand when you mine them. It's just
Right.
yeah. But it is a mineral. And it's like you find rare earths in what they call ionic clay deposits in China, and there are a few around in Myanmar, Brazil, and so forth. So the rare earths are in the actual clay, the sands. But so it's in the ground. But it's like any mineral deposit is in the ground. Some of the deposits are hosted in hard rock. So rare earths can be hosted in hard rock deposits, as well as what they call ionic clay deposits, And I'll talk about Aboutora later, where we're slightly different from those two types of sources of rare earths. But as I said, they are found quite commonly on the surface of the earth around the world, but very difficult, what they call mineralogy, and very difficult to extract economically. So the last rare earth boom in 2011, 2012, I'm not 100% sure of my facts. It was either 200 or 2,000 new rare earth projects were IPO'd around the world. That was over the dispute in the South China Seas between Japan and China, where they blocked rare earth exports to Japan of permanent magnets. So Japan decided to build its own independent supply chain, like the West is trying to do today, outside of Japan. And they were the main financiers behind Lynas, which is the biggest producer in Australia today. So out of those, it's either 200 or 2,000, and I stand to be corrected. But I know out of all those projects that were IPO'd with the big boom in rare earth pricing in that stage, only one was ever built, and that's Lynas. So very few projects go into production. That's the point I'm trying to make, because of mineralogy, because of extraction costs and so forth.
And rare earths are metals. I mean, we're talking about magnets, but are all the rare earths metals, all 17 of them?
Yeah, they're all the same kind of elements, yes. So they when you mine them, they're in the mineral form. Then you have to crack them in a process which is commonly used in all rare earth projects. You crack your rare earth concentrate, as I mentioned, from a mineral form into a chemical form. And once you got to have them in the chemical form, you can then separate them into the individual elements. And once you got those individual elements, which are now called rare earth oxides, so it's a neodymium oxide or praseodymium oxide, that then gets fed to what they call the midstream, which turns it into metal, then it turns into metal, and then an alloy. And then that alloy goes into the permanent magnet. So there's still a few stages downstream after the mining of the rare earth mineral concentrates. So your first stage of beneficiation is cracking into a mixed rare earth carbonate or a mixed rare earth oxide. Then it's separated oxides, then it's metal and alloy, and then it's permanent magnets.
Right. So they are actually in element form, they are metals, but it takes a little bit of processing to get there.
Correct. Correct.
So you mentioned China a minute ago there, George. I mean, this is what hits the headlines, isn't it? The Chinese domination of the rare earths market. I mean, you guys yourselves, not in China, big tick in the box there. But what is it about China that has led to their domination of this space?
Well, there's an interesting quote which I used to use in my presentations a couple of years ago, and that's 30 years ago. I think the Premier of China was Xi Jinping 30 years ago. And it's a very famous quote. He said publicly, the Middle East has oil, China has rare earths. And 30 years ago, the Chinese saw the strategic nature of these minerals, and they decided to build a strategic advantage. And they went into rare earth space in a very big way. And they took the dominance that the West had in producing rare earth elements for these various applications. They decided to focus on being able to do it better and cheaper in China, and they slowly captured all the primary mining of rare earths, which is they control 60% of the primary production of rare earths in a concentrate form, and they also control effectively 20% that comes out of Myanmar. So circa 80% of primary production they control, but they control 95% of the downstream processing to the permanent magnet stage. And that took a strategic decision to become very dominant, because they recognize how important rare earths were going to be over the foreseeable future. And they've been right.
It's
They're very long-term thinkers.
It's an interesting strategic decision that you're discussing there. Do you think they did that at a loss? I mean, because it seems to be quite hard for the Western world to sort of come along and replicate that capacity in in any way that's economically viable. And given that the Chinese are not strictly speaking capitalistic, although of course they are very capitalistic in certain respects, but is it true to say that the Chinese government, just invested heavily with state subsidies, or did they do it in an economically viable way?
I think they took a strategic decision to heavily subsidize the domination of this business, and that's what they did, yes. And they're still doing it today, I believe.
Right. And is it also true that there are a lot of rare earth deposits inside China? Is that one factor that's sort of helped this situation develop?
Well, yes, as I said, they control about 60% of primary production of mineral production.
Yeah.
And but by the same token, they also want to dominate the world in terms of manufacturing, as you know, EVs, wind turbines, so forth, and now robotics. And at some stage, they want to protect their own reserves because they haven't got new reserves. They're mining faster than they can replace their rare earth reserves. So at some stage, there's a risk that the Chinese will say, look, we're going to use all our rare earths for our own consumption and not for the West's consumption. And that's when there's a real danger for the West that, certain manufacturing industries will effectively grind to a halt if they can't get access to some of these permanent magnet rare earths, materials that go into permanent magnets and so forth. So there's a real risk there, I believe. Yeah.
So talking about access to rare earths, how do you get access to rare earths in the sense that if you're mining them, do you sell onto an open market? Do you do off-taker agreements? Are there cartels? How does the market work?
So at the moment, almost all rare earth production by any Western company sells to China. Liners sell a lot of their production to Japan, as I mentioned. They funded Liners. But even the Linus's heavy rare earth separation, which is dysprosium and terbium, was done in China until recently. They've just built a plant in the US, which they commissioned literally in the last few weeks. MP Materials, the biggest producer and the only producer in America, and one of the biggest producers in the world of a mixed rare earth concentrate, I'm talking Chinese terms now, they sell all their concentrate to China. They've just started going further downstream into producing a mixed rare earth carbonate, and they've just started in only a small volume producing separated rare earth oxides. So, and they are then going to be going into permanent magnet manufacturing themselves. But what I'm saying is that even the majority of their production currently is still sold to China. So until the West gets behind building this independent supply chain outside of China, and by that I mean building the midstream and the further downstream capability of permanent magnets. I mean, there are permanent magnets made in the West, but still 95% of all the permanent magnets made in the world are made in China, and the West imports those permanent magnets from China, be it in Germany, be it in France and Europe for their motor industry, be it the US for their motor industry and other applications. They still import these finished permanent magnets from China, and that's what needs to change in the world, and it is changing. Trump's putting a lot of emphasis on this. I mean, it's a bipartisan initiative. I mean, Biden was doing it when he was in power. Trump's just reinforcing it even stronger, and Western Europe now is also starting to focus on this. So it's a very real initiative, but it needs to get more momentum, I believe, to enable projects like Rainbow to be able to sell their separated oxides to off-takers, be it the midstream or maybe the US government needs to stockpile these rares for a short period of time until that downstream can be built out and that industry can be built out in the West.
Yeah, I mean, you say that there's greater focus on it, but what does that really mean in tangible terms?
Well, as I said, we've seen quite a few grants by the US government to fund initial feasibility studies, and in some cases fund building of small production plants, in other words, a demonstration plant in the US to prove that some of these deposits can produce rare earths economically. But it's small money in the bigger scheme of things. Ultimately, I believe there needs to be, the European Union and the US needs to stockpile rare earths for a few years at a floor price that supports the rollout of this whole supply chain from primary production like Rainbow all the way through to the midstream. And that focus is there, but we are seeing the US spending money. They gave Linus money to build their separation plant for the dysprosium and terbium rare earths recently in the US. We've seen them help fund the MP Materials to go further downstream, and we've seen certain other projects in the US get funding from the US government to go further downstream. So they are starting to put their money where their mouth is. Like anything, I think government could move quicker, but they are moving.
And what about the market itself? I mean, you spoke earlier about the immense demand that's likely to be generated by robotics and electric taxis, I think you mentioned, and a few other things, and we've
Yeah,
already got.
eVTOLs, yeah, the vertical taxis, yes.
Yeah. So I mean, if there really are going to be so many magnets sort of wandering around in the sort of brave new world that we're going into, surely that's going to move the rare earth price upwards if the supply can't keep up. And in that case, the market will address the issue perhaps without government intervention on any major scale.
You're 100% right. That is what we, as all rare earth developers in the Western world, are hoping for, is that we'll see the Chinese failing to suppress the price like they are at the moment. We believe the Chinese have suppressed the price. We know the current price of neodymium and praseodymium at $60 a kilogram is below what even the Chinese can produce profitably at. And that was because there was a decree issued by the Chinese government in 2022 when these rare earth elements were trading at $160, $180 a kilogram to bring the price down. The reason why they did that is that they wanted to prevent a lot of Western producers coming into production because they would lose their grip on the market. So we believe they want to dominate the market as they decided to do 30 years ago, and they still want to dominate this market. But eventually, there will be a price buildup and a pressure buildup where they won't be able to suppress the price. And we believe there will be a massive increase in the pricing. Just recently, in fact, we saw with the export ban from China on certain rare earth elements, this was in the last 3-4 weeks, that dysprosium and terbium started trading in the West at 3 times the price that it was trading at in China, because the Chinese price wasn't a real price. So we do believe eventually we will see positive benefit by this demand and leading to an explosion in the price of these key rare earth elements. As I said, demand doubled over the last 5 years, which is very good growth for any sort of commodity, and it's forecast to double again between now and 2030. So the next 5 years, we should see the ultimate demand for permanent magnets more than double. And if robotics come on stream, even at 20% the volumes that Mr. Musk is forecasting, that's going to lead to even big explosion of demand for permanent magnets.
So when you say they're trading at such and such a price, where do they actually trade outside of China?
They only get priced in China. So there's a couple of there's Asian Metals Bulletin, there's Argus Media. They publish pricing for rare earths, which is based on prices between Chinese buyers and sellers as they're trading them on the day in China. But as I said, they're not trading these things at realistic market levels. So I believe, and I've said this many times, is that there'll be a bifurcation of the market. We started seeing that in dysprosium and terbium, and I believe we need to see that in neodymium and praseodymium, because, as I said, at these low prices, even the Chinese producers are not making money; they're losing money. So that can't continue indefinitely. What's the word I was just thinking of? As I said, we've seen reporting out of by some of these rare earth pricing sort of companies like Argus Media, what they estimate is the cost of production in China, and it's currently higher than these prices for these rare earth elements that the Chinese are trying to keep a cap on.
Yeah, so I often see rare earth price sort of abbreviated using NdPr as the proxy, neodymium, praseodymium. Why those two? Why is it those two that are given the pricing prominence?
Because they make up between 75 and 85% of the value of any rare earth basket. So that's your key rare earth elements that people focus on. As I said, in Rainbow's case, we've also got dysprosium and terbium. So those 4 elements out of the 17 make up 95% of the value of our basket, but very small volume compared to the rest of the rare earths in our basket. So we only have to focus on extracting those 4 elements, and we'll get 95% of our value. We won't worry about the rest because it's not worth it. It's not worth it.
So the other 13 rare earth elements are sort of less significant economically.
Correct.
In both directions, really, both in terms of production and in terms of the demand in the wider market.
Yeah, I mean, there is uses for those other rares, but small compared to the level of criticality and importance those other four rares make up.
Yeah. So you've got these four rare earths in your project. Tell us a little bit about Phalaborwa. You mentioned in passing that it is actually slightly different from the standard rare earths types of deposits
Yeah.
that we see. What is it that's different, and what's the opportunity with your project?
So the big key in our project is that we regard it as the highest margin rate business and development in the world today. And that's been independently verified by people like Argus Media. And the reason for that is that we, as I said, we're not a typical rare earth project. We are extracting rare earths from phosphogypsum, which is a waste product derived from phosphoric acid production process. When you make phosphoric acid for the fertilizer business, you use a key feedstock, which is a phosphate slurry. Now, the phosphate hard rock has rare earth elements in the hard rock, but only trace elements, and you could never mine phosphate hard rock for the rare earths. It would just not be economic. But what you do is you mine that hard rock, you through a flotation process, you produce what's known as a phosphate concentrated slurry. So it's a slurry of this phosphate, which has been upgraded through a flotation process, and you feed that into your phosphoric acid plant. Now, phosphoric acid is your key ingredient into fertilizer all over the world globally. When you make phosphoric acid, you add two key ingredients. You add sulfuric acid and you add heat. And there's obviously some kind of reaction in your phosphoric acid plant. You produce phosphoric acid, goes to your fertilizer facility, and it produces a gypsum waste residue called phosphogypsum. Now, the rare earths that were present in the hard rock, phosphate rock, as I said, are not economic, but by the time it's gone through this concentration process, fed into a phosphoric acid plant, and now deported with the waste residue being phosphogypsum onto these stacks that we have at Phalaborwa, you now have an economic grade of rare earths sitting in these stacks. So Phalaborwa, our grade of the rare earths in our stacks, trades at or grades at 0.44% total rare earth oxides, TREO. You put that against a lot of the Chinese production in Myanmar, which is through ionic clay deposits, they graded 0.04 to 0.08%. So we between 6 and 10 times higher grade than ionic clay deposit. And the reason why I footprinted to ionic clay deposit because ionic clay deposits have a very low cost of mining compared to a hard rock project. And then, as I said, so we very high grade compared to ionic clay deposit, and very importantly, when you crack a rare earth concentrate that you mine, whether it's ionic clay deposit or it's a hard rock rare earth deposit, you say you produce a mineral concentrate, then you have to crack that concentrate before you can go further downstream to separate. And when you crack that mineral concentrate of rare earths into a chemical form, you add two key ingredients. You add sulfuric acid, you add heat. So what's happened at Rainbow is that 2/3 of our flow sheet has taken place at zero cost to the project before I start incurring costs. So we've got no crushing and drill and blast and then haul of the hard rock. Then we don't have to crush and mill that hard rock into through a flotation process into a mineral concentrate. Then you take that mineral concentrate and you crack it before you can go downstream. And so all of that is taking place at Phalaborwa at zero cost. And that means our EBITDA margin is running at over 70% for our project, which is, as I said, regarded as the highest of any project in the world today. And it makes our capital intensity much lower and our operating costs much lower because we have so less unit processes to get to that same stage. So that's what makes Phalaborwa unique. And in South Africa and Phalaborwa, the US government through the DFC, that's the Development Finance Corporation out of Washington, which funds a critical mineral fund called TechMet, they recognize that the Phalaborwa project would be a low-cost producer of separated rare earth oxides, critical for this diversified supply chain outside of China, and they've committed $50 million in equity financing to the project on completion of our BFS or our definitive feasibility study. So it was a very good tick by the US government. They did independent due diligence on Rainbow, on the process that we're using to separate and so forth. So we were very excited that the US government came in with a $50 million commitment, and we're on the radar with the US government for this project in South Africa.
So that seems very promising. So does that mean you won't be selling product to China like everybody else?
No, we won't be.
So who will you be selling it to?
Well, we're engaging with various OEMs, from European car manufacturers, turbine manufacturers, wind turbine manufacturers, the Japanese. They're looking for further diversified supply chain apart from this Linus, South Koreans, and obviously, hopefully US as well, US OEMs.
So
I think the US government needs to step in and stockpile these separated oxides for a few years while the downstream can be built out. It's a rounding error on the budget of the Department of Defense or the Department of Energy in the US.
Yeah, I mean, there's certainly there's the West, and especially the US, certainly has the ability to sort of fill that gap, doesn't it? It really just needs to sort of get the momentum to a point where it's unstoppable.
Correct. And I think we are starting to see that now, with the recent flurry of announcements regarding rare earths. I mean, Donald Trump said he's signing a strategic minerals pact with Ukraine because he wants to access their rare earths there. Now, I can tell you now there aren't any rare earths in Ukraine to speak of. And even if there was a rare earth deposit in the Ukraine that was economic, and that's a big if it was economic, you're still 20 years away from production, whereas because of our resource sits above the ground at Aboutora in South Africa, we don't have to drill it, we don't have to, mine it, and so forth. From start to finish, we'll be 7 years from start to finish to get into production. From when I realized that there were rare earths in these phosphogypsum stacks in South Africa, and 7 years is literally going at breakneck speed to bring a project into production, whereas your average mining project is between 15 and 25 years, from cradle to grave. So, 20 years to bring a mining project on stream is kind of the norm. So, and then you talk about, certain projects that have been bandied about in Iceland, for instance. Those will, it's my opinion, but they'll never be mine because for a start, your grade is running at 0.5% for a hard rock project. Now we're at 0.44% for what we call effectively a tailings project. So without all those unit costs, so at 0.5% grade, and grade is king in mining, there's no ways you can ever mine those projects in Greenland economically, because in MP Materials, they mine at a grade of 8.5% TREO, and Linus mine at a grade of 8.3%. Now that's 8.3 and 8.5% versus 0.5% in Greenland, which will be an incredibly difficult country to mine in the first place. So, not in my lifetime will those projects ever be economic, in my opinion.
Even if the demand skyrockets to the levels that we were talking about earlier?
Not even at those prices. You need a lot more.
Right.
Yeah.
So how much of a mine life, or let's say project life, since it's not a mine, technically speaking, has Aboutora got?
So we've got a 16-year life at our forecast production rate, which will produce circa 1,900 to 2,000 tons of these 4 permanent magnet rare earths. Now, 2,000 tons doesn't sound like a lot, but it's very, very high value. So that will be about a third of current Linus production. Linus is around about 6,000 tons. So, maybe a little bit more. So we were just under a third of Linus's production, which makes us a significant producer. And then we signed the MOU with a project in Brazil called Uberaba, which is owned by Mosaic, the global fertilizer business listed on the New York Stock Exchange. Now, Mosaic are a 12 to 14, $15 billion market cap business, so a large scale business. And we were able to sign identified an opportunity in Brazil, which is basically they've got a production process of making phosphoric acid, which is identical to what we saw in South Africa. So they mine a hard rock, phosphate rock, they slurry it into a concentrate, they feed it into a phosphoric acid plant, they add sulfuric acid, they add heat, and they produce phosphoric acid for their fertilizer business, and they create a gypsum waste residue. Now, the gypsum stack at Aboutora is more than twice the size that we see at Aboutora, but very importantly, it's a live stack. So they continuously are producing phosphate gypsum every single day, which goes onto that stack. And the life of that current phosphate rock mine feeding their phosphoric acid plant, has got over 40 years of life. So what we have at Aboutora is a massive long life source of rare earth elements out of phosphogypsum, and we're anticipating doing a project with Aboutora, which will be twice the size of Aboutora. So by the time we finish Aboutora, which will also be a very fast-track project to come into production, we'll be producing those magnet rare earths, as they're known, on a similar scale to Aboutora, not to Aboutora, sorry, to Lynas in Australia. So it'll make us one of the biggest producers in the world, but very importantly, the lowest cost producer in the world. So we'll be able to survive the low pricing points in rare earths if the Chinese try and manipulate prices again going forward.
So are you going to use cash flow from Aboutora to pay for this Brazilian project then? Is that the idea, or are they running in tandem?
No, that's the idea. Yeah, very much so.
And so what sort of numbers can investors who are interested in Rainbow think about when it comes to, you mentioned EBITDA. Have you got any public domain numbers that you can talk about around that?
So if you look at our preliminary economic assessment that we published 2 years ago, and then we did an updated date of that number in December last year, so it's just a few months old, using conservative prices for neodymium praseodymium, circa $100 a kilogram. As I say, 2 years ago, it was trading at 170, 180. So, at a conservative price of circa $100, $110 a kilogram for NdPr, we would generate about $190 to $200 million of EBITDA per annum on a capital spend of about $320 million.
Right. So that's quite, and you mentioned a quite extended project life.
So that's 16 years in Aboutora. So circa $200 million of EBITDA on $300 million of capex, $320 million of capex. So very, very high margin, very quick payback. And that's a conservative NPV discount rate of 10 that we've used in our model there. Most projects use 5, 6, 7, 8 as a discount rate. We use 10, very conservative. And I was very conservative on all our elements in our feasibility study and our updated numbers. If we look at forecast rare earth pricing, I'm talking about 2030, 2032, which is 5, 6 years away from here. You're talking about EBITDA numbers running at about $240, $250 million per annum. So highly, highly profitable if one believes in the demand growth for these rare earth elements. What I can tell you is that current pricing for neodymium praseodymium, which is $60 a kilogram, if Rainbow was in production today, we'd still make about $60-65 million of EBITDA per annum. So still highly profitable, even at current pricing, which is very depressed.
Yeah, that's interesting. And are you aware of any long-range forecasts for rare earth prices?
Yeah, there's long-range forecasts are back at $160, $180, $200 a kg. So at $100 a kg, I'll be very happy, for NdPr. We'll still be super, super profitable and highly successful business. And you can see us going from 60 to 100 quite easily. I don't need $150 or $200 to make my project economic, make our project economic.
And so what will the product be that you'll ship to the OEMs? Is it a form of concentrate that you'll be sending?
So we will ship what is known as a separated rare earth oxide to your metal facility. You'll turn it into metal and alloy, and they will then feed it to a permanent magnet manufacturer. You'll then sell it to the OEMs.
Right. So, and the pricing is at the gate, is it, or how does that work?
Yeah, it'll be at the gate. Yeah, it'll be at whatever. Well, unless we're going to strategic long-term offtake at a floor price, which I believe we need to do, and we'll have a floor price, and we can have a cap for part of our production, not all of it, but part of our production. But I think we can negotiate a floor price, because if you think about it, in the uranium market now, the Rainbow team, we've designed and built a couple of uranium projects in our previous lives in mining engineering business, and we successfully built 2 uranium mines in South Africa, designed and built, that is designed and built, and we designed and we're building Berkeley Energy's uranium mine in Spain in about 2012. I sold that business to Amic Foster Wheeler a few years ago, about 10 odd years ago. But the point I'm making is at that point in time, when we did the bankable feasibility study as MDM as well on that uranium project, spot price for uranium was $19, $20 a pound. The contract price that was went into the feasibility model was at $45 or $42 to $45 a pound. So the guys who required a sustainable supply of uranium for their nuclear power plants weren't worried about the spot price of uranium. They were prepared to pay $45 a pound for uranium to make sure that a significant and sustainable supply of uranium, you know.
Yeah, I mean, it's interesting you mention MDM there, because it's perhaps worth emphasizing that you guys have got some significant levels of experience in projects on your CVs.
Yeah, no, thank you for that. As I said, as a team, we've designed and built. Well, I don't know. I mean, I don't know how many mines and process plants around the world, and done countless feasibility studies. So, and all the key technical guys at Rainbow, we all work together at MDM Engineering. Yeah. So we've got a very experienced team. You know how to design, know how to build, know how to deliver and commission. And this is basically a chemical process plant that we're building here. It's not a mining project at Aboutora. It's not a mining project at Uberaba. It's a chemical process plant, and I've got some of the best chemical engineers, I believe, in the space working at Rainbow.
So it's interesting to speculate. Perhaps you'll provide us with the background, George. You built all these mines and projects in the past. How did you sort of land up on this Palabora rare earths project? Given that, I mean, I'm sure you're capable of building a gold mine, or anything you want, really. What was it about this project that kind of drew you in?
Can build a gold mine standing on my head.
Yeah.
Very simple process plant, very much easier commodity. No, the chairman, Adonis Prulis, is a very good friend of mine. He asked me to come in and take over Rainbow late 2019 to help refinance it, which I helped him refinance it and take it over as CEO. I'd left Amic Foster Wheeler, the company I'd sold MDM to, and I took a break for about 18 months, and then I needed to start to do something. And I ended up being on the other side of the coin, where now on the mining side, I'm engaged with engineers to do design on our behalf. But as I said, when I got involved with Rainbow, the first thing I did was phone my ex-chief metallurgist and technical director at Rainbow, a guy called Dave Dodd. He was the original D in MDM Engineering. And Dave, in his career, designed and built over 80 process plants around the world, from zinc, gold, uranium, copper, manganese, platinum, diamond, you name it, and done over 100 feasibility studies. And then got a guy, Chris LaRue. He was the chief metallurgist at the Goldfields. He worked for me at Rainbow. He worked for me at MDM. He's joined us at Rainbow, and we have another young process engineer called Rue Vildenbu. He came from a subsidiary of DRA, the big engineering company in South Africa, and they've got offices, Canada and Australia. They're a global engineering business. But Rue came from DRA, but very importantly, he did the bankable feasibility study for Makango on the Malawian rare earth project. And the MDM team that is with me at Rainbow, we did the bankable feasibility study for Namibian rare earths in Namibia, obviously, and for Peak Resources project in Tanzania that's just been bought by the Chinese. We did the bankable feasibility studies on both those projects, the Rainbow team. So we have a lot of inherent experience in rare earths, I might add, compared to the average sort of rare earth sort of junior mining company out there.
So given all that, do you see any opportunity for further expansion for Rainbow? I mean, you talked about the Brazilian opportunity. That seems quite large, and perhaps that'll absorb your focus for a while. But on the other hand, I think people may be interested to know if you see any opportunities for project acquisitions or other sorts of corporate activity in this space that you've now sort of made your home in?
Funny enough, I do see other opportunity, and this opportunity that's coming to Rainbow. So we're more of an RP company now, a technology company, because even the RP that we've developed around separating rare earths out of this phosphogypsum, it's not, we're not using any bespoke equipment or reagent. It's all standard stuff that's been used in the mining industry, but it's the way you apply it. So we're using continuous ion exchange, which we use in uranium plants. As I said, we've designed and built 2 uranium plants. We're building a third one. We've done a number of uranium studies as a team, and we know continuous ion exchange, which we use in those uranium projects like the back of our hands. We're also using ion chromatography, which is a technology that's used in other industries. It's used in the sugar industry, phosphate industry, lysine, and biochemical industries. And we're applying ion chromatography to separate the rare earths to the final purity level. So it's all known technology, but it's the way we applying it that's the inherent RP that sits within Rainbow. And because we've built up this RP, we've had guys in Canada approach us to do a similar type of JV venture that we have with Mosaic for an opportunity in Canada. We've also had OCP in Morocco. They've got huge phosphogypsums generation. Well, they produce huge phosphogypsum waste residue from their phosphoric acid production in Morocco. And they've asked to partner with Rainbow as their technology partner and see what we can develop with them. And we've had the same with the Saudi Arabians who've approached Rainbow. The government mining company there has approached Rainbow to look at maybe as an opportunity to see if we can extract rare earths economically from their phosphogypsum stacks in Saudi Arabia. So we have a number of opportunities coming at Rainbow. These are longer term opportunities, but they certainly are something that Rainbow's at the forefront of these guys, partners, to partner with. And so that potentially creates a much bigger opportunity down the line for Rainbow. But it's a long-term, these are long-term R&D type projects, but at least they're within Rainbow's control, for want of a better word.
Would you expect to sort of earn consultancy fees on those types of deals or actually participate on a project level?
Look, we'll have to see what the economics look like on those other projects, but it might be a combination. It might be, to partner with them on the ground, or it might be some type of technology fee, because we've got enough on our hands, as you mentioned, but we haven't thought about that in detail yet, but we do have our foot on these opportunities, and it's a very exciting time for Rainbow from that point of view.
Yeah, indeed. So before we close, George, let's bring it back round to the macro level a little bit. First of all, you're in South Africa. Does that present any particular challenges to you? I'm just thinking, of the current argument that the American State Department is having with the ANC, and you've talked about the DFC. I think it was the development bank that you're involved with. Are you able to sort of swerve all that kind of thing, or does it present you with awkward phone calls that you have to make now and again?
Well, touch wood. First of all, as I said, we're not a mining project, so we don't have a government royalty on our project. It's a chemical processing project on a brownfields chemical site at Aboutora, similar to what we've got with Mosaic in Brazil. So that takes a lot of what's the word I'm looking for, I'm trying to think of the right word, but it takes a lot of hassle away. Okay, so we don't have that direct government involvement in the project, which helps. We think this is a strategic project for South Africa because we will be, significant taxpayer, in the country. We're not going to have any funny structures to not pay any tax in South Africa. We're happy to pay tax on the profit we're going to make. So we'll be a very big employer in the area in Aboutora. We will be a significant taxpayer. But very importantly, the money from the DFC is equity financing. And the fight with the US government and the South African government is on development aid. So that aid money is at risk because of various policies being pursued within South Africa, and I don't want to comment on those. But in terms of the DFC, it's a strategic equity investment, and that we believe is not at risk because and I tweeted this we tweeted it a couple of weeks ago, had a bipartisan congressional delegation on site at laboratory and pilot plant in South Africa, at Mintech in South Africa, where there were Democrats, there were Republicans, and a member of the DFC, and they were there just to check on the progress of the project, and so this is still very much in America's target as a real project, so much so that they sent a delegation to visit us just literally 3-4 weeks ago. So I think this could be a very good building block to helping ease the strained relations between the two governments,
So finally, George, how much of the recent media hype around rare earths do you think is fluff and bluster, and how much do you think is really significant? I mean, you and I talked earlier in this conversation about demand, and we sort of established that the demand that's coming is very, very real. But in the media flurry that we've seen, especially with Donald Trump, and you mentioned Ukraine a moment ago, it seems like there's not really much strength in depth in terms of the in-depth knowledge of that reporting. So it's really hard to gauge whether there's any real, really meaningful message coming out of this hype. What's your view on that?
I think, as I said, we saw China export bans on certain rare earth elements literally 4 weeks ago. I think the hype is very real from the point of view that it's focusing the European Union, and Trump is very focused on it, is that you cannot rely on one source of these critical permanent magnets out of China. And be that, so if China stops exporting of permanent magnets to the West, your car manufacturing industry will come to a halt. Your wind turbine manufacturing industry will come to a halt. Your as I say, critical for speaker systems, headphone systems, drones, your drones, your electric scooters, your electric bicycles, all those things need permanent magnet motors, and all that production will come to a halt, similar to what you saw with the ban on chips a few years ago. We saw manufacturing come to a halt in the West. So I think the fact that you got this risk that China can weaponize these rare earths, I think there's even more focus now to support the rollout of an independent supply chain outside of China. It's not good business practice to rely on one supplier for anything, even if you're making your glasses, the frames you make. Now, if you have one supplier of the resin that goes into that frame, you've been held to ransom by him. So, whoever makes those glasses you're wearing, well, there are 4, 5, 6 suppliers of the resin that they use to mold those glasses out of. You only have one supplier of that resin. And when you think about military applications, an F-35 fighter jet's got 420 kilograms of rare earths per jet. American California class submarine has got, I think it's something like 5 tons of rare earths per submarine. No, sorry, it's 15 to 20 tons. They're tanks. They're the big American tanks. I think it's the Abrams tanks. They've got 3 to 5 tons per tank. And then it goes into your missile guidance system. It goes into your heat-seeking missiles. It goes into your night vision goggles. All take rare earth elements. All that strategic defense, high-tech defense equipment needs rare earth elements. And now you've been supplied by one country. That's not good business practice by any stretch of the imagination. And I think you'll agree with that.
I will agree with it. So we'll watch and see what happens. George, it's been great to talk to you today. Thanks so much for making the time.
No, pleasure. And hopefully that was informative, and hopefully your audience enjoyed that.
I think they will. Thank you.